All right, so there's a lot of people that are in trouble right now when it comes to their mortgage, their finances, and some of the situations that we're hearing, not only from some of our clients who are referring some of their friends and colleagues, and ultimately what these clients are experiencing, the lack of advice or the really poor advice that they're being given, and it doesn't make any sense. Sometimes it's best to just really be honest with people rather than sugarcoat it and tell them to do something that's going to actually put them in a worse financial situation in the next little while. So this week I want to take an opportunity to go through some of these situations, ultimately expressing what you could be looking at or what you should be doing if you find yourself in this situation. So all that and more this week. Once again, thanks for stopping by. If you have not yet subscribed, please consider subscribing, hitting the notification bell, as well as leaving your thoughts, questions, and concerns in the comment section below. Don't forget to like and share the video, especially if you know someone that can benefit from this content. But let's get right into it. So this week I want to share a story. We're going to ultimately change the names and to keep our clients all their information confidential. I mean, a lot of our clients were getting very similar scenarios, and we're just sort of providing our clients with the truth, the reality of the situation, because they're getting really bad advice from other brokers out there. Some of the more popular voices on social media are really misguiding and misrepresenting these particular clients. Now, what their motives are to do so are obviously anybody's guess, but at the end of the day, it's always important to get a second opinion, especially if you're taking on a private mortgage, especially something that's very high in rate and may not give you all the options that you're searching for. At the end of the day, these products make the broker rich and the bank rich, leaving the client at the wayside, right? So we have to understand that. So in this scenario right now, you may find yourself in a situation or know someone that is at or approaching mortgage renewal. Maybe they don't have a mortgage renewal coming up, but they have purchased a home in the last couple of years. Let's say after the entire FOMO run, if they purchased them in the last 5 years, depending on how much they put down, there might not be a significant amount of equity in the home, especially if they put less than 20% down. Now, a couple of these scenarios, clients have put less than 20% down, some of them put just 20% down. And what they've done is, with their banks and their brokers, if they've spent an obscene amount of money on appraisals over the last 6 to 12 months, hoping that there was enough equity in the home to maybe refinance the property. Now, in Canada, you can't refinance the home unless there is 20% or more equity in the home. So basically 80% loan to value is the maximum amount that you can go conventionally with most banks and alternate lenders, right? Obviously, depending on your geographical location, some banks may require a little bit more equity in the home, some less. Some predatory lending practices may be able to provide you with solutions at what cost though. So the client spent about $1,000 in appraisals, and we'll call the client the Smiths, for example, okay? And the Smiths basically are in a situation right now where they've purchased their home in the last couple of years. They are running up their debt, credit cards, lines of credits, they have car finance payments, and the two individuals, the husband and the wife, with their kids, they are seeing a decrease in their hours, right? So one individual is in the construction sector. They found that, hey, they're not working 5 days a week. They've been pulled back to about maybe 3 days a week. And obviously because they've had a child, if I didn't mention it, they did have a child, and obviously one person's still on maternity leave, and they're not getting 100% of their pay. So obviously on both fronts, they're not getting 100% of what they should have been earning or what they would have used to qualify for their mortgage. Obviously, when they bought their home using another broker, obviously looking at their financial situation, their expenses. Look, at the end of the day, a lot of people rushed into the market back in 2020, 2021, buying a home. They were stretching their budget, right? Ultimately, this is what they were doing. They were looking to stretch their budget. And if you're, looking at this particular situation, saying, hey, when we bought that home, all income was firing all cylinders. We could afford it. We had the ability to do that. We weren't expecting twins in this particular case. Life happens. This is the reality. So with that being said, the clients are now saying, okay, well, The home is worth now $900,000. So those appraisals have been coming in significantly less. In the last appraisal we saw, it come in about $80,000, $90,000 less than what they've purchased the property for, okay? So what's happening now is they can't refinance conventionally, right? So they also have debt. They have almost $80,000 of consumer debt, right? They have credit cards, lines of credit, so on and so forth. They're trying to get refinanced. They can't do it. They've been, talking to their broker for months, and all they've been doing is saying, "Hey, we'll get we need an appraisal." I'm sitting there going, well, there's tools that brokers have like Purview or, where we can look at the property valuation, and we would have saved you $1,000 right off the hop and not having to go through the appraisal, right? I mean, just absolute, it's bonkers. But ultimately, at the end of the day, once again, it's the who's benefiting from the situation. Then the brokers asking them, advise them, say, hey, they have someone that they know that will lend them money based on their value at like 85% loan to value, which is high risk for a private to do that. So higher risk means higher premiums mean higher payments that the clients just can't afford. So ultimately the client's like, well, Anthony, we want to do it, it's going to give us a real bit of runway. And I'm sitting there going, okay, well, we have to look at the equity in the home. So obviously there's, let's say $100,000 of equity. If you look at that situation right now and say, hey, we were sell the house right now, we might be able to come out with something, at least a little bit of something, even after commissions. And ultimately, once again, even though the house may be worth $900,000, what it ends up selling for could be significantly lower. So you have to also be presented with the fact that, okay, look, here's the reality. If the home sells for less, is the realtor going to get paid? I mean, ultimately, is the realtor looking at that saying, well, I might not get my commissions out of this, and clients don't have the money to pay me out of pocket because they have no additional savings. So how are they going to get out of this home? And ultimately, right now, the advice that they're giving is taking the private mortgage to literally lever them up even more. And can they sell that house, right? I mean, in a market right now where values are not coming in, things are sort of retracting right now. We're seeing more listings come to the market, less buyers. Is that going to be a feasible solution? So rather than tell the client, look, I think you should sell the house right now, you take what you can, walk away with it, because we don't know what the future has in store. Next 3 to 6 months may be better, may be worse. We may see, a couple years before we see the entire real estate market even come close to a rebound or signal a time where things are going to start to increase a little bit or even go flat. I mean, we have no idea right now. That's the reality. So do you take what you have right now, look at your future finance and say, look, can you move in with family? Is there family help that will help you or take you in? Is it better to, go out, sell the property and rent? I mean, maybe that's not ideal. It took you so long to get to this point, to buy that home when you did. But you have to put your pride aside and say, look, I need to sell this house and basically put my family first. The other option we presented the clients, looking at them, we put them in touch with a realtor, they contacted their existing realtor to help them buy their home, and in that particular scenario, and find out what the house is renting for in the area. So maybe they can rent out their house in the meantime and go live with family, and this way it at least helps them cover some of that shortfall, right? So I'm not use an example. Let's say their mortgage payment was $3,500, whatever the case is, way more than that. But let's say half of it is being collected by rent. So rather than dish out the full amount plus the property taxes and so on and so forth, which they're still obligated for, and even though rents are pulling back, the clients can come up with a little bit more, and maybe it buys them a little bit more time. And we're not saying that's the solution for them, but nobody presented them these options, right? They said, just take a private mortgage at a higher rate, it's going to help you. And we're sitting there doing the math saying, at these payments, even if you pay out a percentage of your debt, it's only going to buy you a certain amount of runway until the point where there's actually no option. So to bring it full circle, if you're finding yourself in a situation where your mortgage is coming up for renewal, you're already finding yourself behind the 8 ball, or you're behind on your income, you're already defaulting on maybe credit card payments or line of credit payments or car payments. The last thing you want to do is default on a mortgage payment, because if you do plan to ever get back into the real estate market, that will report on your credit bureau, and that missed mortgage payment is very bad. It's extremely bad when you try to qualify for a mortgage in the future. So you have to understand, before you start missing mortgage payments, before you default on that mortgage where you impact your future, try to look at your options to get out ahead and don't wait till the last minute. Now, ultimately, there's a lot of scenarios like this. So if you know someone, or if you're in this situation, go out, get a second or third opinion. maybe it's time to step into reality and sell your home. Even if the market is weak, we don't know if it's going to rebound. A lot of people I know with rental properties that are underwater, they're just holding on for dear life. And I always tell them, look, you're forking out the money now. You're figuring out a way to make that money today, but you're going to pay for it either today or tomorrow. Right? Pay now or pay later. You're paying each month. You might as well cut your losses now, sell the home. As long as you can sell it, pay off the commissions, whatever it is that you have, come up with a little bit of money, put that towards the next home or towards servicing your debt or finding a rental property. It's better than missing all these payments, going into default, damaging your credit for the next 7 years. And this is really a true story. Like, this is happening. And once again, these are from people that are coming to us. And, obviously, if you find yourself in the situation, I don't sound like a broken record here, but I think it's super important. Get ahead of it. Find out your options. A private mortgage may not be your solution, right? It may not be the solution. And once again, it makes the banks rich, it makes the broker rich because there's fees and so many different things attached to that. Lawyers, this, that, the other. Everyone gets rich except for the client. So at the end of the day, we want to make sure that we have our client's best interest at heart. And if you see yourself in the situation, make sure to talk to a mortgage professional, get a couple of opinions, get a second opinion, third opinion, and make sure that you find yourself in a situation that's going to benefit your family. Don't look at the situation for today and say, hey, this money's going to help me for the next little while. Because if the market continues to deteriorate and home prices continue to come down, you're going to find yourself in an even more dangerous situation where you're going to be forced out of your home, and obviously the damage, all the implications that come with going through a power of sale. So we'll leave the video here. I want to hear from you in the comment sections below. What would you do in a situation where you're like this? Ultimately, we want you to share this video if you know someone that benefits from this content or might be in a situation like this, so they can get the right advice and help keep thousands of dollars in their pocket and preserve their credit. But until next week, thanks again for stopping by, and we'll see you all next week.